Hey, what's going on? It's Nick here from Ways of Wealth. Thank you for tuning in. It is week 33 of the market recap. For those of you returning subscribers, I appreciate your support. You know what the deal is. For all of you that are brand new, we highlight key events that happened in the market over the past week. So I'd like to ask you a huge favor. If you learn something new, if you get some value out of the video, smash that thumbs up button. It definitely helps me out. And make sure you hit that subscribe button, turn that notification bell on because we do this every single week. On this episode, we got a great one lined up. We're going to be talking about stock splits. We saw Apple, we saw Tesla follow suit. We're going to be talking about what it is, what the impact is, and should you be investing. All right, let's dive in. So the first thing we should do is cover what is a stock split. Now, the best way to explain it is through an example. And that example is when the pizza guy shows up.
Who is it?
It's Little Nero, sir. I have your pizza.
Leave it on the doorstep and get the hell out of here.
Okay. Well, what about the money?
And you have $100 bill and he can't break it. So now you go to your roommates, you go to your parents, you say, can you split this? Your dad says, I got two 50s. So he's gonna give you two $50 bills in exchange for the $100 bill. You go to the pizza guy, you say, hey, is a 50 enough? No, I can't break it. Now that two 50s for 100 would be equivalent to a 2-for-1 stock split. So the company is now going to give you two shares at the same value as what one share was worth. Now that pizza guy isn't accepting that 50, so you got to find an alternative solution. You go to your mom, you say, hey, can you break down this $100 bill into something smaller? She says, I got 5 20s. So obviously the pizza guy can accept that, but what that is you're exchanging one share of 100 for 5 shares of 20. So the value stays the same at the end of the day. One party does not benefit over another. The market valuation of the company stays the same. They're just allowing more shares in the market. And then from there, obviously the stock price would reflect it. Now you may ask, if the value or the market cap of the company doesn't increase, then what is the point? Like, what is the point of an Apple splitting the shares if it doesn't increase any value to the company? Well, you see, it's more of a perception thing. They want the shares to look lower so that retail investors like you and me can see the price and be a little bit more subjective or want to buy that company at a lower rate. Now, Apple trading at around $400 a share looks more attractive visually at $100 or $140 a share than it would at what is trading at today at over 400. Now, we know that this doesn't increase the value or the value of the company hasn't gone. It's just a mere visual aid that makes retail investors, more the younger investors, enticed to invest in the company, which definitely seems to be happening for both Apple and Tesla after they announced in the past couple weeks that they will both be splitting their stocks. Here's what Apple's chart looks like since the 4-for-1 stock split was announced on July 30th. The stock has jumped over 20% in this 2-week period alone. And Tesla was not too far behind, announcing a 5-for-1 stock split on August the 12th, and the stock has exploded, up over 18% as of close on Friday after just 2 days. I wonder if other CEOs are taking notes and putting this in their playbook. Stock splits have been on a steady decline since 2011. If you look at the amount of companies that were above the 100 share price or even the 1,000 share price, it is minuscule in comparison to what it is today. Now, there's a couple reasons as to why companies are doing this. And the first one is the institutional investor. The institutional investor does not look at the price of the stock and say, that's too expensive, I don't want to buy it. They're looking at the valuation. They're looking at the balance sheet, the income statement. They're trying to figure out, discounted free cash flow, what that price of the stock is most likely to look like in the future if that company stays on its current path. So when they see something like an Amazon at over $3,000 a share, they understand why it's $3,000 a share, and they obviously have the financial backing to go in and buy the amount of shares that they need. Now, the second ideology behind it is the introduction of fractional shares. So going into these smaller brokerages and buying a fraction of a share of a company, which does allow the retail investor, the younger investor, to go in and get a partial share of Amazon. But obviously, if you factor it in, you think about it, it would definitely entice me if I was a fractional share owner of Tesla. If they cut it down and they do a stock split, I would definitely be enticed to go in and buy a full share at the $300 to $400 mark. Jim Cramer was on Mad Money this week, and he broke down a list of 10 companies who he said would benefit just as much as Apple and Tesla have as if they were to split their stock. Now, it is important to remember that the company's valuation does not change during the split. But with that being said, I'm definitely enticed in some of these companies. For one, Alphabet, who is the parent of Google, it's trading around $1,500 per share. And the only thing that is really getting in this way of the company in the future is the threat of government stepping in, breaking up the company, due to fears of basically them having a monopoly. So if they were to do a stock split, I would definitely look at, adding to certain positions that I have within the company. Another one for me is Costco. I'm a huge fan of the big box store. I think that their private label Kirkland speaks volumes to what the business is doing. Obviously, a concern there is the growth of how many stores they can continue to add. But I mean, with that being said, a lot more people are cooking at home, and in order for them to save costs, they're going to look to buy in bulk. Another one on that list for me is definitely Facebook. I mean, the social media giant is an advertiser's dream. It's providing the ability for the advertisers to target the consumers that are most willing to buy. Not only the ability for them to, capitalize on the advertising side, but also their ability to transform and keep up to date with their competitors is truly amazing. So if you think about it like this, if I were to buy 5 shares alone of those 3 companies that I listed above, that would cost over $40,000. Now, my portfolio isn't the biggest. I'm just starting out on my journey. And if I were to do so, I would be allocating over 50% of my portfolio just to 3 names alone, which doesn't really give me a proper balanced portfolio. But if they were to do some stock splits, it would allow me to add these 3 names in, obviously at lower percentages, but I would still be able to benefit off the gain of these 3 companies that I think are bound to be around for the next 20 years. In my opinion, I definitely think that this is the sentiment across the board. I think a lot of younger investors would like to add exposure to these big names, but a lot of older investors are calling this a signal of the top of the market. So they're expecting that because this is happening now, the market is going to crash. But my thing is that if you believe these companies are going to be around for 20 to 30 years, which should be your investment horizon, then you would dollar cost average no matter what over. So if the stocks do fall in a second wave or in 6 to 12 months or whatever the time frame is, you're going to dollar cost average over the next 20 years anyways. All right, thank you for tuning in. That is it for this week in the market recap. I'd like to ask you a huge favor. If you've gotten some value or you've learned something new, smash that thumbs up button. It definitely helps me grow. Don't forget to subscribe, turn that notification bell on because we do this every single week. Also, follow me on Instagram and have a great week on the markets. Happy trading.